Hello and welcome to Halftime Report. Well, it's 12 noon, the final day of 2018. For the time being, it appears that the bulls are taking a bit of a break. The markets have moved into the red as we speak. I'm Nigel D'Souza, and with me today, lighting up the screen, is Surbi Upadhyay. Hey, Surbi.
One last hurrah of 2018 with Nigel D'Souza. Absolutely. Well, yes, it is the last trading day of the year. It's getting a little quiet on the screen, as you can see. Maybe people are just winding it down, getting ready for the evening.
They ought to. I mean, and tomorrow and today, if it's going to be like this, tomorrow I wonder what's going to happen. People will be waking up midday after partying all night.
I want to see how many trading floors actually have more than 70-80% attendance. When we have to have full attendance, that's just the nature of the game. But anyway, right now, keep an eye out on the FMCG twins, ITC and HUL. They're kind of pulling things down. Reliance has been dragging its feet, as are some of the heavyweights like TCS. So we've got our eye on those stocks. Let's get started. Here are the headlines this noon on the 31st of December, 2018. The market is all set to end 2018 on a flat note. Key indices likely to end in the green with low single-digit gains. Mid caps and small caps set to underperform by a good margin this year.
And bond yields spike on fears of a large farm support package. Financials erase gains.
Metal stocks gain today as tariff war fears ease. US President Trump tweets that big progress is being made on the trade deal with China.
Positive feelings as we enter 2019, but do expect some correction. That's the word that's coming in from Ramdev Agarwal. Adds that the Nifty may go to 12,000 or 13,000 levels, even if oil goes back to $85 per barrel. He bets big on the capital goods space as it could be the sector of 2019.
Okay, so all those big voices coming up for you on the show as well. But let's get started with the stocks that are in focus today. This is our Movers and Shakers segment. And the first stock on the radar this afternoon, DCB Bank. Abhishek is joining in with the details on this one. There's a ratings upgrade on DCB that's come in, Abhishek?
Well, Subi, CRISIL has upgraded DCB's rating on its Tier 2 bonds that forms a part of its Basel III capital framework to AA- from A plus that it had earlier. So what this impacts is that the better rating will actually help DCB Bank in getting funds at a cheaper rate than their previous historical levels. The rationale mentioned by CRISIL is that the asset quality, that is the gross NPA of DCB Bank, has remained stable at and around 1.5% to 2% over the various business cycles that we have seen. The SMA 1 and 2 accounts that are dues over 30 days and 60 days past due form just 1% of the book, and that is why they feel there is no risk in the balance sheet and it calls for an upgrade. Back to you.
Okay, all right, Abhishek. Just take a look at three of us here in the studio. Black and red, that seems to be the color that we are working with. Abhishek Surbi.
It's the season. It's the season.
Okay, all right. Let's hop across. Sonal joins in as well to tell us about realty companies. Sonal, over to you.
Well, you're talking about black and red, but I have green on all the realty stocks that are based out of Mumbai. And that is because the FSI for the coastal regulation zone has been brought in par with the rest of the city. So earlier it was around 1.33 for the coastal regulation zone, but now it has been increased to 3 from 1.33 in the island city and from 1 to 2.5 in suburbs. That means there will be more land available to the developers for development. But remember, there is already so much unsold inventory in this particular part of the city. So I don't know where the developers will actually get the demand from, but definitely it is a positive for those companies because they get additional land for development. Back to you.
Okay, so all the real estate companies in focus. Sonal, there are other stocks also on your radar today?
Yes, absolutely. I'll start with Asian Granito. That stock is on the downside today, down around 8%. That is because the company has informed the exchanges that the promoter and MD was arrested by the Directorate of Revenue Intelligence for a matter that involved around 3.5 crore rupees. However, he's out on bail, but definitely the investors are not liking that fact and the stock is down in trade. Bharat Financial also in focus because the company has completed its fifth direct assignment transaction in FY19 amounting to around 850 crore rupees. Other stock that I'm watching out for is Aavas Financial because the company has informed the exchanges that they've received a refinance assistance of around 500 crore rupees from the National Housing Bank, something that the street is definitely liking. NCC is one stock that is buzzing in trade today because there is a Philip Cap note, a bullish one, where they are seeing that this is the correct time to buy the stock. The company has a strong order book and a strong balance sheet, and despite the slowdown that they're seeing in road and metro segments, the company has been able to build up strong order book. So something that they like about the company. They are also liking the subsidiary performance of the company, and they have a buy rating with a target price of 145 rupees per share. In the broader markets, there are a couple of other stocks that are buzzing in trade today. I spoke about the real estate companies like Prestige Estates, Brigade. Also, some of these sugar stocks are in sweet spot right now, like Uttam Sugar, Dwarikesh, all of them up and buzzing in trade today. Back to you.
All right, Sonal, thanks so much. Let's take the real estate point forward. In fact, earlier today, we spoke to Mr. Jaishankar, the CMD of Brigade Enterprises, who says the next 3 months will remain challenging for the real estate sector. Let's listen in.
NBFC issue is a serious one. It has pushed the cost of funds even to recognized and A-rated developers also by anywhere between 50 to 75 basis points, if not more. Money itself may be difficult to get, and if they get, it may be anywhere between 12 to 15% rate, depending on the company to company and their financials. I think the next 3 months is going to be challenging in my opinion as far as the financial crisis is concerned.
Well, just a quick recap of all the top buzzing stocks we have. We have DCB Bank, Suntech Realty, Oberoi Realty, Kolte Patil, Asian Granito, Bharat Financial, Aavas Financial, NCC, Regent Corp, Prestige Estates, Brigade Enterprises, Balrampur Chini, Dwarikesh, and Uttam Sugar. That was a long list.
Okay, well, plenty of green for what it's worth. So yes, it is good tidings, it seems. Let's now move on to another very interesting story. Now, for the very first time since the launch of that 59-minute MSME loan scheme, which was announced on the 2nd of November, you're supposed to get these loans in under 1 hour. The government has revealed data on the loans that have been sanctioned through the portal. Over 1.12 lakh applications were given in principle approval. But what are the actual disbursements and sanctions looking like? Those numbers look a little lower. We've got Ritu Singh joining in, who's back from her break as well, actually earlier this week, to dissect the numbers. Ritu, how does it stack up?
Well, Surbhi, the applications that have been made, 1.31 lakh applications, is actually a pretty decent number for you talking of just a 2-month window. Between the 2nd of November and up till the 25th of December is where we have this data. It was filed in a Lok Sabha reply by Shiv Pratap Shukla. That is where we have been able to source this data from. So, of the 1.31 lakh applications that were made, 1.12 lakh applications were granted in principle approval, which is actually a pretty healthy 85% approval rate if you look at it. But if you look at the actual sanctions that the banks have made, now of this 1.12 lakh applications, banks have only approved 40,669 applications of all those that have applied, which means less than 36% actually of those that made an application on this portal were approved by the bankers when it came to sanctioning the loans. In terms of the amount that has been sought, the total amount sought by all the applicants was about 37,000 crore rupees, but the amount sanctioned by the banks to these 40,000 odd people is about 14,088 crore rupees. Now, this is again 37% of what was sought. So you can see the clear picture that, when the government in its launch, they said this is a guarantee of a loan in under 1 hour. I mean, the reality looks quite different. In fact, if you look at some of the trends that we've been able to analyze from the data that we've got, of the 20 banks and SIDBI that have been a part of this lending process on this portal, 10 banks are actually under RBI's prompt corrective action norms, and do remember that restricts these banks from lending to high-risk borrowers. Do remember all of these loans are collateral-free loans. They are MSME loans. Many of them are to the first-time borrowers, so the risk component is fairly high. So that is one thing that remains questionable. If you look at the kind of banks that have lent to it, the highest number of loans have been granted not by State Bank of India, but in fact by Bank of Baroda, that has made almost 8,995 loans amounting to 3,700 crore rupees. This was followed by Union Bank of India and then State Bank of India and Bank of India, in that order. So the largest sanction actually has come in from Bank of Baroda in this case. Going by the kind of credit growth that we've been seeing in this sector, the latest RBI data indicates that the credit to micro and small industry grew at only 1.6% and the credit to medium industry grew by 10%. Now, that data was just to highlight the need that the MSME sector has for further lending lending. But if you look at the asset quality profile, if you just look at the public sector banks that have been the primary lenders here, the NPA ratios as of FY18 for the MSME sector stand at 13% compared to 12.5% the year before. But for banks under PCA, that number is even higher at 15.74%, therefore also highlighting the risks that these PCA banks are undertaking by lending loans to this MSME sector under the portal. Lastly, we had indicated earlier that there's an Ahmedabad-based one-year-old company, Capita World, that is actually managing this portal that gives out loans to MSMEs. And just by going, by the fee that every applicant makes is about 1,000 rupees plus GST. Plus, if you multiply by that by the number of applications that have been made, this private company has pocketed 1.3 crore rupees in just a matter of 2 months. That is also a fact that one must keep in mind, about where all this money is really going to. But to sum up, 2 months may be too small a time to determine the success, the failure of this portal. But this surely is a grim reality check that this portal is not really a guarantee that you will get a loan in just under an hour.
Okay, all right, Ritu. Well, I guess MSME lending, great in principle, but easier said than done. I guess that's the lesson that bankers have learned through 2018. Thanks very much for getting us the numbers on that one.